Says we're live. I'm just gonna check out if you guys, if anyone's seeing this over on Facebook, just hit us up in the comments, say hi, let us know you're watching. Meanwhile, I'm gonna check out and see if we're live. We are here for our webinar with Jeff Meziere today, so really excited about that. We'll give everyone a minute to file in here. Excuse me. And yeah, I'm very excited to have Jeff with us today. We're just getting a little peek at his presentation, so really excited to see what we've got here. So if you're watching in the Facebook group, go ahead and say hi. Let us know you're here, where you're watching from. I am watching from a very rainy Georgia today. So I don't know if it's raining where you are, Jeff, but it's been rainy for, I feel like, the past 3 days now, since Saturday afternoon. Yeah.
Well, the heat finally broke here. I'm in Oklahoma City. The heat finally broke, and it is beautiful and sunny out today, like 75 degrees. It's wonderful.
Oh, that sounds much better than, were you up to 100 out there before, or how hot?
It was like 98 2 days ago.
Oh, so, my goodness. Yeah, that's unbearable.
For sure.
Very hot. So good that it broke a bit.
12 days of summer already.
Yeah, right? I know. And it's only really officially, what, the second day of summer officially?
Right.
So, all right. Well, we've got Joanne watching from hot Houston, so it's still hot in Houston. Joanne, I don't know if you're going to get a break from the heat down in Houston. I don't know if that happens down there, so you just have to bear it. All right, I'll go ahead and get started. So again, if you're watching, let us know. Send us a comment right there in Facebook. And that way we know you're here, who's watching. I see people joining in now, so that's great. I'll go ahead and get us rolling here. So for those of you who don't know me, which is probably everybody at this point, but I'm Emily from GoWP, and welcome to today's webinar, Building and Using a Budget for Your Agency with Jeff Meziere, who's with me right here. Really quick, I just want to say a couple words about GoWP in case anyone watching isn't familiar with us. At GoWP, we create happiness for digital agencies and help them to become more profitable by increasing their revenue, lowering their overhead costs, and retaining their clients for ongoing work. So whether you're ready to grow your team with a developer, copywriter, designer, or project manager, or you're looking to outsource work so you can focus on growth, we've got you covered. We're also committed to helping agencies grow through the resources we provide in this community, things like today's webinar, ebooks that we put out, the webinar series, the workshop series that we do, and just having this amazing community that we have here with the Niche Agency Owners community and all of the great advice and knowledge and experience that everyone shares. It's so valuable, and it makes me so happy to do what I do every day. So thank you to all of you for being a part of that. I also want to mention that creating a GoWP partner account is 100% free, and it gets you access to all sorts of resources to grow your agency. Currently, in our knowledge base inside the partner portal, we have landing page templates to help you sell care plans. We have a maintenance schedule lead magnet and a landing page template to help you generate leads from that and increase your recurring revenue by selling more maintenance plans, and all sorts of documentation that you can take and make your own to use with your clients and prospects. So you can create your partner account at my.gowp.com, and it's completely free again. So no, you don't have to buy any of our plans or anything like that. And all of those resources, you can find them in the knowledge base in there. So if you have any questions about partnering with GoWP and how we can help your agency, feel free to reach out to me here in the group. You can email me, emily@gowp.com, or you can, hop onto our website, and we've got a chat bot there, and we'll be happy to help you out with anything you need. So a few notes regarding the webinar today. I will be watching the chat, so if you have questions, throw them out there, put them in the comments, and we'll get them to Jeff either when they make sense, or we'll save them for the end of Q&A. And yeah, so I see we've got Monica from Austria, got Zach here, so that's great. So I think we can go ahead and get started. So let's get to why we're here today, and that is Jeff Meziere. So Jeff is a virtual CFO at Business Value Academy, where he helps agency owners grow revenues and maximize profits. Jeff is passionate about using data to drive better decision making. I know that some of you all may have seen the panel discussion we did with Jeff previously on selling your agency. I've been lucky to see him in some of the webinars and office hours they've done with Business Value Academy, and he's always got such a great perspective and such a great take on finances, and just helps you to think about things that you maybe, at least for me, hadn't even occurred to me. And he puts it in a way that's easy to understand and easy to implement. And he's so helpful and willing to help. So I'm really excited to have him here today in this community. So thank you for joining us, Jeff, and welcome.
Yeah, thanks for having me. Really looking forward to having a conversation here today. Just to kind of tee it up here, if you have a question, please post it in the chat, because it's never fun to just go through an entire presentation here and talk about finances and budget. It's not really something that gets people on the edge of their seat far too often, right? Is that, oh, really want to come to this webinar today and talk about finances and budget. So if you have a question, I am a virtual CFO. I guess you could say that lends me to be somewhat of an expert when it comes to finances. And if you have a question about anything related to finances, throw it in the chat and we'll try to get to it by the end of the session. So yeah, you want to just dive right in, feet first? Is that how we kind of do this thing?
Let's do it. Yeah, if you're ready, I'll put your screen up on the presentation and we'll just dive right in. Yeah. Yeah,
sounds great. So today we're talking about agency budgets and budgeting. So how do we create a budget? Why do we create a budget? And how would we use a budget going forward? So hopefully today, by the time we're done here with our time together, you'll kind of understand a little bit maybe about break even, what that means. The stages of cash flow and where you stand today. And then most importantly is gaining some confidence and understanding how to build your budget and how to use it. So first off, let's start with the why, right? Why is it important? Why is a budget important? One of the greatest quotes that comes to mind is Dwight D. Eisenhower, who said, "No battle was ever won according to plan. However, no battle was ever won without a plan either." So this is one of those things where it's always just one of these best practices related to finances is start with a plan, right? Are we on track? Are we off track? It's easy to have conversations and pivot somewhere down the road, but to go out just blindly, right? I always use the example of trying to get on a plane. Would I jump onto a plane with a pilot and not know where I'm going, right? That does not sound like a fun trip to me. Maybe somebody would think that would be fun. For me, that is not fun, right? I live in this world of debits and credits and somewhat of certainty and risk avoidance. And so that does not sound like a good time to me. So I always say, start out with a plan. And that's what we're doing here with a budget, is to start out with a plan. Secondly is, personal quote, the wealthiest people I know have two things in common. They all have budgets and they all have goals, right? And they adhere to them. They come back, they monitor, they measure, they look at them. And that's how we really kind of utilize a budget for your agency once it's established. Having it, putting it on a shelf and never looking at it again is not the most valuable use of a budget. And we'll talk about that as we go. Let's first talk about break even. This is kind of one of those, I guess as a virtual CFO, I should say this. My job is to help you gain confidence in understanding financials, knowing your numbers inside and out. And so when I say the words break even, a lot of people are like, what does that even mean? Well, that means that I'm not burning through cash. And I need to understand where I'm at in the stage of my business as I go to establish a budget. So let's start out with break even. How much sales do you even have to have every month in order to be able to cover all of the expenses within your business? This is a really good starting point. It's a question that sometimes people don't necessarily have an answer to. They go out and they say, I want to grow revenue and I want to make more and more and more and more. How much more do you need to make? Where are you even at right now, right? So these are questions that we would have as your virtual CFO. So what is break even? Break even is that revenue, cash sales in, expenses out to get down to that net number. And that's what we really care about when we first start talking about break even. You can look at the past 3 months of your expenditures, right? And especially like right now through this pandemic, things have changed so much. And so when we go back and look at like the last 3 months of activity, sometimes there's a big wave and a big difference. So we try to average those out, look at what the expenses have been, and we're trying to understand how much sales we need in order to be able to overcome that amount. Now, if you're in a positive situation and you know that cash is positive every month, great. You're just in a different stage right now than some people are, right? So you may be coming to this webinar today and asking yourself, how do I create a budget? How do I use it? You might be saying to yourself, man, I've got to do something because I'm in this urgent and important stage of my business career right now where I'm burning through cash and I got to get back to profitability. And you might be even further along than that and saying to yourself, I've got all this cash and I need to know how to plan for it. What am I going to do with it? Now that's the fun and exciting stuff. But right now, I know a lot of people who are in this category of trying to make it, trying to figure it out, and trying to really dot their I's and cross their T's on finances. So again, how do we get there as far as break even goes? Look at the last 3 months of your expenditures. These are costs of sales, operating expenses, everything. And this is net income less the cash outgoing. And that right there is your net number. If that's a negative, you're not at break even yet, right? So we got to get either more sales and or squeeze more expenses to be able to get to that break even point. I've been talking to you a little bit here already and kind of teeing it up about stages. What stage is your business in? So as it relates to accumulating or burning cash. So are you in that cash burn stage? That's the early stages, right? Like I don't have enough revenue to even overcome, and I'm investing in myself. I'm investing in my business because I believe that I can make this business work. That's in that cash burn phase. Then we move into that neutral phase where we've got enough revenue coming in. We've got some expenses going out, but we're comfortable. We're at least making our bills. We're paying our bills. We've got revenue and consistent revenue coming in. Then you move into that next phase, which is building a reserve, right? That's that third stage. You start to accumulate some cash. You've got more revenue than you do expenses far too often than not. That doesn't mean every month, but far too often than not. Then that final stage is, and this is the fun part, strategic investment and risk taking. Boy, I've figured things out. The business is doing really well. It's spitting out a pretty good amount of cash to me. And now I need to understand, what do I do with all this, right? How do I utilize and leverage this cash to grow my business? And so I just kind of visually give you this stages of cash flow. The first one obviously is in the red, right? We're burning more cash than we're taking in. The next one's kind of that neutral phase. Then we're in that accumulation phase in the yellow here where we're starting to accumulate a little bit of money. And then finally over on the far side of the screen is we've generated a significant amount of cash and we're looking to grow and do something different. I just want to point that out because I think it's really important to understand, where are you today as you go and build your budget, right? Okay. And I'm just going to keep plugging along here unless, Emily, you stop me, okay? All right. So as we start to build our budget, when we start talking about things like goals, that's what we want to find out is, what are your goals, right? I want to understand what is a reserve goal, because as we start to build our budget, we need to start out with a plan. So once I understand where I'm at in that stages of cash flow, then I can start to think through goals. And we do this. It's probably hard to do in open forum, but when you work with us one-on-one, we have these conversations to better understand that and really establish what a reserve goal is. So when we start thinking about budgets, this is the how do we do it? And hopefully we'll hit on this today and kind of clarify. I actually have a cash flow Excel spreadsheet. We do it in Google Sheets. We'll share it with you at the end of this presentation. Just make a copy of it, take it, use it at your own pleasure. Dump in your own numbers into the forecast and budget, and you should come out with some, at least semblance of an understanding of a forecast or a budget at the end. So how do we get there? This is this stage of the presentation today. We start with the last 12 months, just philosophically. We start with the last 12 months. If we had all of our financials and we lined them out and we had a total of the last 12 months of profit and loss, revenue, income, and getting down to that net income number, we would line all those up, put all that information into the spreadsheet, and then we'd start asking ourselves the question, so what's changed, right? This is where we just start poking holes in everything. Can we replicate? This is the question we start with. Can we replicate what we did over the last 12 months? We know that things have changed, times have changed, revenues changed, your customers may have changed, the mix of products that you sell has probably changed. And we'll take all of that into consideration as we start to build out and make tweaks to what happened over the last 12 months. Hey, if you've rolled out a new product and things are going well, let's take that into consideration and think about what the revenue may look like. And does it cost us any more now that revenue is expanding? Does it cost us any more to replace that? So I'm going to quickly show you. Hopefully you'll be able to see it here on the screen. Emily, can we see that okay?
Yeah, it looks great.
Okay, awesome. So this is the one, we'll share this link with you. It's got two things on it. It's got two tabs, one down here at the bottom that says break even, which is kind of the things that we just did, getting to this is the monthly outgoing to see what your 3-month average is, to understand if we don't know what that is, to help you understand your break even. And then secondly is this 12-month forecast, this budget, if you will. And all it does is simply right across the page here, month 1, 2, 3. So what I would do is I would go back to the last 12 months and I would simply input all of that information of revenue right here at the top, right? So we've got all of these pieces of revenue, subscription sales. This is your recurring revenue, things of that nature, project income, other income that you might, break out within your financials. That gives you your total revenue. Then we've got like cost of sales, right? This is your direct labor costs, contract laborers, subscriptions that you have to use for product, et cetera, et cetera, et cetera. That's all the things that would go into cost of sales. So all we're doing is trying to outline what is our cash income and outflows for the last 12 months. And when we do, then we're just going to start thinking through and making changes to that across the page so that we can come up with what we think our forecast is going to be over the next 12 months. But we start just by simply, can we replicate what happened last year? So if I'm sitting here in the middle of June, my month 1 right here is actually going to be July of 2020. And I'm looking to say, can I replicate July of 2021 based upon the current environment? And you just continue to do that for 12 months on out, okay? Does that make sense? Has that flow okay? Clarification questions there.
I think that makes great sense. And just a reminder, if you have questions, put them in the comments. And I did want to say, Jeff, that I asked if anyone was willing to publicly identify what stage of the business they're in. We have one person saying that they're definitely in the red for sure. Alicia saying that she's past the red and into the reserve building. So that's fantastic. So we've got folks at different stages here. And I'd like to know also if you all are willing to comment publicly, who has like what Jeff just showed, who has a budget, who has sat down and actually, itemized their costs like that. If you've done it, if you haven't done it. So yeah, comment that too, because I know judgment-free zone here. It'd just be great to see what stage people are at in budgeting as well.
Yeah, certainly. It's always an interesting question is, even those that are making money, right? And they might even be in I'm in the cash generation, right? The gathering phase, and we've figured it out and we're doing well. And you ask some of those business owners whether they have a budget. And sometimes the answer is, no, I don't, right? I have no plan. I don't have a budget. I just go by gut feeling, right? And that's the difference between using an accountant and working with a virtual CFO is that the accountant might tell you what happened in the past, a lot of compliance stuff, and working with a virtual CFO is really going to help you uncover to make more decisions based upon data and fact, right? So using data to help you make decisions is really what the job of a virtual CFO is.
Yeah, that's so much great value. And I know, like you said, the gut feeling, that's a lot of folks in this community, because we've talked about this in our happiness hour calls on Friday when we've asked these kinds of questions before. And when you say like, oh, you've got money in the bank, so you feel good, right? But that doesn't tell the whole story all the time. And it is digging into the numbers like this. And we have a couple of people saying, Cynthia saying she's in the yellow zone and she just started budgeting last year. Tim saying he's got a budget, but he's not sure if it's set up to calculate all the forecasted expenses and income. So yeah, we've got a whole range of folks on the webinar today.
Yeah, that's great. So we'll talk about how to use that budget here in a second, Tim, in this conversation. Hopefully it'll help you understand kind of we tweak, right? And so it is this continuous improvement, as I would say, when I work with a client, make it better every month, just a little bit better. How did we look at income? Were we off from our estimate? why were we off, understanding that, and tweaking then our budget moving forward, right? So how does that impact? What was the underlying framework for our estimate, and what went into that calculation? And so then once we know data and fact, we can then make changes to that budget moving forward, right? So that's kind of how we would do that. It's just continuous improvement. So if you don't understand, you don't have to be perfect at it. We didn't learn this overnight. I've been doing this for 25 years plus. So, you know, it is, you live and learn. You live and learn. Here's some things that we would consider, right? So these are just questions that we would pose when we sit down and work together to build a budget. Has headcount changed, right? We've had to lay some people off. We might have had some revenue that we've had to better support. So we brought on additional resources. I might have some people who are due a raise, right? So last year's salary is not the same as this year's salary, right? We've given them a little bit of a raise, or they're due a bonus, or insurance premiums. Man, I don't think I've ever seen this category of expenses go down ever in my entire career. So insurance and the cost of health insurance and others is always ever so increasing. And then you have to think through some of the things that you might have as planned expenses, right? In that time where you're burning through cash, some of these things get put on the back burner. You say, I'll just do with what I have, right? I'm not going to make any large investments right now because I'm going to make the most of what I have as resources available to me. But then as you start generating cash, you think to yourself, all right, well, I've waited long enough, and I've got to buy that new server, or I've got to buy that new software, or I want to make life easier for my employees through some investment of technology or resource or whatever. Those are planned things that you should build into your budget. You know that they're coming over the next 6, 9, 12 months. So it really shouldn't be any surprise to you, right? And if we don't plan them ahead, then they become urgent and important. And then we're trying to scramble around trying to find cash when we don't have it available to us. And that's what we're trying to avoid, or things like that. Other things to consider. So past revenue review, let's look at that and look at the trends. Is your business cyclical? Do you have more revenue in a certain month than you do others? Or are you on a subscription type business? Hopefully with GoWP, you have the opportunity to be able to get some more subscription-based business, right? Some of those care plans. And with that those managed plans, can we grow that revenue? Is it very sustainable, and is it consistent? Or are we doing projects that sometimes are up, sometimes are down? And is there any pattern to that? I would want to know that when I work with you about trying to create a budget so that we can build that in, right? Just because we did, you know, $120,000 worth of revenue last year doesn't mean that we did $10,000 a month, right? And so if we know something about the flow or seasonality of that revenue, we want to take that into consideration when we build this budget too, because on those months where expenses are more, we have to figure out a way to pay for it. We might as well identify it now and be more confident and comfortable in going to a bank or knowing where that money is going to come from, as opposed to keeping people on board and not knowing where next Friday's paycheck is going to come from, right? I've been in those shoes. I've been an owner and operator before, and I know what it's like to sit on Monday, Tuesday, Wednesday, knowing that I've got payroll coming on Friday and not knowing where it's going to come from, right? So I do have some experience of the hear what I say, and I've been in your shoes. I feel your pain, right? So we don't want to go back to that moment, because I know what that feels like. Current and future revenue considerations. So as we think through the next 12 months when we're building this out, what has our conversions been like, right? What are the number of leads that are coming into us right now, the potential prospects, the customers? How well, in an automated way even, how consistently are we converting those leads to actual customers, right? The process for that. Because if we're doing a much better job this year than we were last year, and now we have more leads, well, my mind tells me is we're probably going to have more revenue, which then also tells me that we're going to have more resources to support that revenue, right? So we have a lot of considerations to go to think through when it comes to revenue as well, and how we would apply that to our budget. And then, of course, we've got external factors, but at least it's something of conversation that we should have, right? What's going on with our clients, right? So we're doing a great job of an agency, but if we're in an industry, I just got back off vacation. We were just talking about this, Emily, and the industry itself in hospitality has not been great, right? Like trying to find people, and there's been a lot of people who have closed their doors in that industry. If I serve that type of industry of an agency, I have to at least take that in consideration. Is that, are my clients impacted by environment, competition, industry, right? What's going on economically around me? And does that have any impact on what I would think and consider? And again, I asked this question from the beginning. Can I replicate what I did over the last 12 months? That's a real just good barometer. Like, I know that I did that over the last 12 months. Was that hard to do? Is it going to take a lot more effort to do that again? Is it even possible, right? These are the questions we have, but we convert those into numbers when we talk about it. So again, these are things that that have an impact on budget. When we start talking about cash and revenue, there's really only a few ways to increase and impact that cash, right? So I can change my price. I can get new sales, either to new customers or upsell to existing customers. I can reduce cost, or I can reduce the time to collect my accounts receivable. All these are types of impact upon cash, right? So we have to be very careful too if we are generating revenue and doing work for people that don't end up paying us, right? So if we've got this accounts receivable out there, how long do we allow that to go? These are days sales outstanding where you're paying your people, you're paying your resources to do work for someone that may or may not pay you, right? So we have to take that into consideration and say, if we expedite that cash, we can go and collect on that. That's also how we would affect cash in the door as far as a projection goes. Okay. This is kind of that lecture part. I'm kind of ready to get to Q&A because I don't like lecturing to people. Like, it doesn't feel very fun. Some key takeaways: prepare for the worst, but hope for the best, right? Be conservative in your numbers when you go to look through this this budget, this 12-month forecast. And then ongoing review. This is the thing that we say is, how do we use a budget? Well, the way to use a budget is print out your monthly budget and print out your actual financial statements from your accountant and compare those two, right? We can do this in an automated way if you have like dashboarding or modeling that you can work with your accountant. But in a very simplistic way is, look at the differences between what you thought was going to happen and what did happen. And then when you learn, make changes to your budget going forward based upon what you learn. That's all we do. And it's a continuous process. Every month we're asking ourselves those questions and making those types of changes. So measure what matters. You got to monitor your KPIs, things that are important to your business. Beyond just the revenue, expense, budget to actual, you have to start hopefully identifying, working with someone and identifying what's important. How do you define success? It goes beyond just revenue. The question is, how did you get that revenue, right? How did you generate business? These are the things that I would be asking you to define your key performance indicators. I would be more interested in understanding how you generate revenue and how you make money, and focus on those things, because then revenue and expense kind of takes care of itself on the backside. Those are those leading indicators that we really need to take into consideration, measure and monitor. So again, start now. Doesn't have to be perfect. It's going to be terrible out the gate, and that's okay, right? Your first crack at it, you're going to look at it and say, oh, I didn't come anywhere close, and that's all right. What did you learn from it? Just like in your business, you do this all the time as an owner, as an agency owner. What did you learn from it and improve moving forward? So that is my presentation. I've given you, we can send you the slides for this, and we can also send you the cash flow forecast that has both the break even and at least some semblance of a model that you can use for building a budget. And shoot me some emails, ask me questions. I give you an opportunity for a free 30-minute call if you get in there and dig through a budget and don't understand the cash flow forecast or have questions or whatever. You can hit me up. I'm actually in the community, so I'm on the Facebook community. Shoot me a message or ask a question anytime.
Thank you, Jeff. That's so great. And yeah, Jeff's in the group, and I've tagged him in a couple of the posts leading up to this webinar. So if you have questions after the fact, or maybe you're watching this recording later and have some questions for Jeff, you can tag him in there. But I would honestly recommend taking him up on that free 30-minute call. And something I also just posted in the comments here is that if you have questions, anything really, ask them now, because I've been on webinars with Jeff in the past, and it's been about budgeting, marketing campaigns and budgeting and figuring out, the return and that sort of stuff. And it was practically a free session with, a CFO for your business. And and Jeff is so generous with his knowledge and experience. So if you have questions, get him out there now, because Jeff he's got, I would wager to say, answers for any of the questions you could have on this topic. So feel free to post those in the comments. I do want to just highlight a couple comments here. One from Jay, that he loves the continuous improvement idea, and that in Japanese business philosophy, there's a term, and I don't know if I'm pronouncing this right, but Kaizen is Kaizen. I'll put that up on the screen here. So that's a Japanese term just for this concept. So one word to kind of sum it up. So I thought that was cool. So thank you for sharing that, Jay. And we've got another question. So yeah, we will be sharing the slides. We'll get the link from Jeff, and we can put that in the group, so you'll have that link after the fact. One thing I wanted to mention, Jeff, is I posted a poll in the Facebook group yesterday asking how folks in our community make sense of their finances. The vast majority answered that they use a bookkeeping software and/or an accountant, to help with that. 2 people only said a formal budget and careful tracking. 2 people said periodic profit and loss, P&L reviews, profit and loss reviews. 2 people said intuition. And then 1 person said business experience managing other businesses. So being that it seems like the majority of folks in this community use bookkeeping software and maybe have an accountant look over their numbers, quarterly or once a year, maybe just a tax season time. What could a bookkeeping software not do for you that budgeting like this can really help with?
Yeah, I think that, well, I think I get this question a lot. What is the difference between, I already have an accountant. I don't need a CFO, right? I have an accountant and I don't need to do a budget. And to be honest with you, I am a CPA, right? So I don't have any problem knocking my own peers in this regard. CPAs are not designed to help you with these kind of things. What a CPA does is keep you in compliance, does taxes for you, make sure that all your filings are done right. And at the end of the month, they look at your transactions and probably are able to prepare for you some semblance of a balance sheet and a profit and loss for you to be able to see historically, right? Like what happened last month, okay? And when I say that very intentionally and directly by saying it's very rear view mirror, right? I'm looking at what happened within the last 30 days. So if I get all of my books together and I get that to my accountant, I'll be willing to bet the majority of people who are on the call that do use an accountant, even the ones that do use an accountant, don't get financial information from their accountant until at least the 15th of the following month. So we're 15 days late, or maybe even after that, if they even reconcile it on a monthly basis. And in working with a CFO, or the way that we look at finances differently, is that we're looking ahead, right? I want to know, what is my goal in the next 6 months? I'm looking forward through the windshield, trying to avoid landmines. That's what a budget will do for us. If I develop a budget and I understand like some semblance of a plan, and months 1, 2, and 3 are operating pretty close and according to plan, then that tells me that my framework, the philosophy that I use in order to be able to create my budget, is pretty close. And I'm probably pretty spot on to being able to, months 4, 5, and 6, be able to meet that plan again. If I'm off, well, then I need to readjust and pivot and do something different. But I can start planning ahead. If I met my budget in months 1, 2, and 3, well, then I don't have to really be that concerned about month 4 that I recognize and see out there in the future that I've got a big expense that's coming, right? But if I'm off, I need to pivot and think and consider. And I want to make sure that there's no, big monsters around the corner that are unforeseen, right? These big obstacles in the road that come about that your accountant is going to tell you happened. Your accountant is going to say, hey, last month you had a big expense and you blew through $50,000. And I would rather say, hey, we have $50,000 that it looks like we're not going to overcome in the next 3 months. And how are we going to overcome that now so that you sleep better with more confidence at night?
I love that. I think that makes a lot of sense, and it's resonating with the folks watching too. We've got Alicia saying, and Jay, both, that the concept kind of a CPA equals your history and CFO is your future, right? So that totally makes sense. Are we able to take a look at that spreadsheet again, Jeff?
Yeah, certainly. Yeah.
And we will, Cynthia asked, we will be sharing the spreadsheet as well. So we'll share that with you all in the Facebook group too. So would you recommend that this is something somebody gets together prior to maybe taking the time to talk with a CFO and get some planning done, that they take some time and get their numbers in order and figure out what they're spending and what their costs are and what their revenues are and all of that, and then take that to do some planning?
I would say that just like on our cash flow stages, that business owners are also in different stages as to their understanding of financials, right? Understanding their numbers in their business. Some might look at this spreadsheet right here of incoming cash and outgoing cash, and it might look like a completely foreign language to them, where they might be able to utilize a call or go to a financial expert and say, hey, help me understand what in the world that is, right? My job is to talk at a 5th grade level, right? Like help my kid who's in 6th grade understand what a financial statement is. And if I can't do that, then I haven't done my job. So there are times where, if you are in an early stage and you don't understand, you have to be vulnerable first enough to raise your hand and say, I don't know what you're saying and help me understand. Because if I'm saying it, it's important to your business. You should understand it. And if you don't, take the time to understand and learn it. That's what we're here for, right? For those who have a little bit of financial knowledge and they understand financials of revenue, expense, profit and loss, budget, balance sheet, assets, liabilities, things of that nature, then I would say is dump your numbers into this spreadsheet. And as you have questions about it, then you have a real valuable call by coming and asking your questions and saying, tell me what this means and tell me why it doesn't work and tell me how you got there, or tell me how I can improve this, because every one of these little cells inside of this spreadsheet could actually probably go and have its own spreadsheet, right? Like, revenue of subscription sales in month 1. Well, I could have 5 different products, right? 5 different levels of subscriptions with different varying amounts of customer volume and pricing and all that different stuff. So we could have that to where it rolls up into something different. It can get extremely complex. I'm just trying to give you a decent idea of framework to be able to use to start being able to have a little bit more confidence in understanding your numbers.
Yeah, absolutely. And I think, that same thing applies when you're looking at the KPIs that you were talking about earlier as well, because you could, once you start listing out KPIs, you can come up with 1 million of them for your business, right? But you really want to figure out what are the big indicators for your business. And that's what you need, start at the top level. And then once you get a handle on that, then you can start drilling down as is appropriate, I guess. But it's easy to, once you get sucked into the world of spreadsheets and data and all of that, it's endless. So it's important also to kind of keep that big picture view, wouldn't you say?
Yeah, for sure. I have a client that I recall here recently who came and said, I looked at KPIs for my industry and there's a list of 200, right? And I'm like, that doesn't seem like, it seems like you would be generating more data to be able to present and measure on 200 KPIs. Those all can't be valuable and important, not to your business. Like, you got to narrow it down to what's important for your specific business in your specific industry, right? And I would answer the question by saying this: if you're measuring something and you are 10% to the positive or 10% to the negative when you measure it and you don't do anything differently, then you're measuring the wrong thing. If you're not taking action based upon looking at a measure, then you're measuring the wrong things, right? I want to look at something and say, okay, this is important to my business. I want to make sure that my gross profit is always at 50%. If it's not, that means I'm either paying people, they're not productive, utilization of my billable performers, right? Within an agency. I want to make sure that my design people aren't sitting on the sidelines, right? I want to make sure that they're actually billing people and actually doing work. These are things that are important, right? And if I'm doing something wrong, or if the measure is off, then I want to go dig in and take action. I want to go find out why that person's not working. I want to find out why we don't have any revenue there. I want to find out why my sales team doesn't know that we have capacity to be able to go sell for that individual resource. If I'm not taking those type of actions, then I'm measuring the wrong thing.
Yeah, I think that makes complete sense. And you want your budget and you want your KPIs to be your guide for making decisions. So yeah, I think that I love that. I love that. I think that's great. We had a question here from Alicia. So she's saying for annual expenses, so things that she pays annually, does it make sense to break that into a monthly expense, divide that cost by 12, or just list it out in the month that it's due for the 12-month budget overview?
Yeah, it's so funny. People ask this question quite often is, oh, I know that it's $12,000 a year. But again, I'm going to give you this example, right? So if I put it in there for $1,000, right, and it's actually due here in August, okay, then I've got $1,000 in July. I've got $1,000 in August. But guess what? I had to come up with $12,000 in August. So the answer to your question is, those are the types of things that we're going to plan out from a cash flow perspective. And if we have to write a check for $12,000, then we're going to put that in the month of $12,000, in the month of August, in the month that we actually have to outlay the cash, because that's when we have to find the cash to be able to do it. Now, if I've got a $12,000 insurance premium and they're allowing me to do a monthly withdrawal and pay it off in 12 equal installments, well then, okay, yes, I would put that in as a monthly amount. And or things like utilities, average amount, put a number in. It's just a budget amount, right? Average it out to $500. If you live in Oklahoma, like us, $300 a month in utilities, that could be $300 in February, but it's $900 in July, right? So that's the seasonality to that expense that we have to take into consideration.
And that's great. That also, absolutely. And I think it also speaks to the importance of knowing your historical expenses as well, because you can say, I spent $12,000 last year on this one thing, so you can budget for that in the coming year, or no, if you plan on spending a little bit more. So yeah, I think that helps as well. I would be curious to know, of the folks watching who do budget and do have a budget built for their agency, are you also personal budgeters? Do people also, have budget for their personal lives as well? Because that's something too. And I would imagine also being in this industry of agency owners, there's a lot of overlap there too. If you are a business owner, then there's a lot of overlap in how your business budget impacts your personal budget as well, and home expenses and that sort of thing, family spending, all that kind of stuff. Because it's one and the same, really. There's a lot of parallels there.
Okay, I'll be vulnerable and tell you I'm a CPA, and the cobbler's kid has no shoes. I do a terrible job of personal budgeting. I just want to let you know.
I wasn't going to put you on the spot, but I was hoping you'd answer. So you don't have spreadsheets for your family spending?
By the time I get home, I think I'm spreadsheeted out. So. Yeah,
I don't blame you. Let's see. We've got Alicia says she does budget personally every month, but she's not as good at doing it with her business, but she does do it well personally. So that's great. Awesome. Yeah. So you've got the foundation set, Alicia. You just got to implement it there. It sounds like you're right on track. So that's awesome. Thank you for sharing so much. I appreciate that. All right. Well, if you have any more questions, we'll hang around for a couple minutes more. Post them in the comments. Again, if you're watching this recording and you didn't get to get your questions in because you missed the live stream, that's fine. You can still comment on this recording, tag Jeff, and he'll get to you. Also, we've shared the link for grabbing that free 30-minute session with him. I really would recommend that for anyone who's, like you said, even if you're just getting started and you have not done anything with this. schedule a call and get off on the right foot, right? Or if you have gotten started, schedule a call and review it and see where you can get going from there. Jeff is a really incredible resource on this, and I feel really fortunate to be able to get him into this community and have him here with us today. So thank you, Jeff. We got one question in here. So this is from Jay. It's easy, I'll put it up on the screen here. So it's easy for business owners to focus on generating revenue, but can lose sight of cash flow leaks. And he's guilty of this, he says. So for agencies, what do you find is a common area where dollars are lost under the radar?
That's a really good question. A budget should help you identify very specifically which one would do that. I don't know that I can point to one and say specifically that there is one that comes to mind that says, oh, you've got, that it happens far frequently or anything of that nature. I think that the one that I think probably first comes to mind in answering that is utilization of resources, and having underutilized resources where you've got revenue coming in that might not necessarily match the resource that you have as a full-time employee if you use that model of employee, in that you've got people who are sitting on the sidelines that you're paying and they're fully absorbed in your expenses, but you don't necessarily have revenue specifically for them. And I use the creative engineers, developers, whatever, that you don't necessarily, they may have some very specific, unique talent that we keep them on because they've done good work for us in the past, and they're hard to find. And so we keep them on as employees, knowing that if we had to go find them again, it would be very, very difficult. But at the end of the day, we don't have that revenue right now. And so I think that people probably hold on to that talent, and that's an investment in that talent. And so I think that's where my experience thus far has been around people who have some expenditures that we really talk about as investments in that case, right? There's a reason that we keep them on. So in my example, it's not necessarily a leak as much as it is an investment. And all the others just, to me, come out as dollar amounts of percentages of revenue and percentages in general of variations from a budget, over under. And it should really jump out of the page on you even after 1 month, right? If we're looking at labor resources for each department as a percentage of revenue, the first month that that's off, it should jump out of the page at us.
Yeah, I think that makes sense. And on your note of, having a budget would make these things very obvious. Alicia hit the nail on the head here, I think, and I was going to comment something similar, but she said, in general, she notices that money is wasted on small subscriptions. So these can fly under the radar, especially when it's something that's $5 to $30 a month. And it's always good to review those every few months. Are you still using those tools, right? Or do you still need it? Maybe you are still using it, but it's not impacting any of those KPIs or any of those top things you want. It has no impact on that. So do you still need it, right? And where can you cut costs? And I think that those are, like Alicia says, those are a lot of those little tools, and ongoing subscriptions can add up over time for sure.
I know that we're almost at the end of our time, and I don't want to muddy the waters or overly complicate anything, but I do want to introduce a quick concept to you that hits on this very specific issue, and that is zero-based budgeting. So, we started in our presentation here today and we said, hey, can you replicate last year? And that's really kind of the government model of, I'm a government agency and we gave you $1 million last year and you spent it all, so therefore we need to give you at least another $1 million. And zero-based budgeting is a concept that says, why do you need it? I'm going to start with zero, and you need to justify everything that you're taking, right, as far as expenditures go. So this kind of hits on your subscription and wasted amounts or dollars that we're paying as like, we've got these subscriptions to different services out there, and I'm guilty of them myself, right? File storage and email and everything else. And you just don't realize it because it hits your card. But if you were in a situation where you said you had to go ask for it every year, and you go through that process of, you start with zero, you go look at every expenditure and say, do we still use that or not, right? Ask your team. They might uncover a bunch of stuff that you're paying for that they're not even using, or that there's one person on your team that's requiring you to pay for a large subscription just because they don't want to change when everybody else on your team has already changed, right?
Absolutely. Yeah, that's something we do pretty regularly here at GoWP is, review, hey, are we still using this? Do we still need this? Are there other tools out there? Are there improvements, or we can be doing this better with something else, things like that. So I love that zero-based budgeting idea too.
I had a client one time, and this is the utilization of those things too, right? So if you want to think of something to actually look at is, what is your regular process that you go through to ensure that utilization of all these expenditures and subscriptions that you have? I had a client one time that underwent a Zoom project and bought pro licenses for everyone. And after 6 months, they came back and looked at it, right? And none of them actually even needed a pro license because nobody was hosting meetings longer than 40 minutes.
Yeah.
So little things like that, where when you have a large organization as they did, it was a big number.
Yeah, absolutely. I think that's so smart to think of it that way too. So great, and thank you, Alicia, for bringing that up, because I think that is a big one, especially with all the lifetime offers and things like that, where people in this industry are quick to buy. We're early adopters. We all are guilty of it, but taking the time every now and then to review what you're spending your money on and shipping off what you don't need anymore, and saving that money. All right, well, Jeff, I think that's it for the questions. I haven't gotten any more in. Thank you so much for your time. We did get some people asking if your contact info is on the slides, and I believe it is. So when we share those slides, and we'll share links to how you can get in touch with Jeff and all of that as well. I'll share that shortly after we end this live stream here. And yeah, if you have any other questions, reach out in the Facebook group. Reach out to Jeff. You can reach out to me, anything there. We've posted links to my Business Value Academy, which is fantastic. Are you all open for members right now, or how's that working currently? Oh
yeah, of course. Yeah. I mean, we would love to continue building that community up and talk about business value and how to increase value, the often overlooked concept of building a business.
Wonderful. Yeah, I love what you all are doing there. It's really fantastic work, and the insights you share there are always super valuable. So we'll share all those links again for anyone who may have missed them. And that's it. So thank you, everybody, for watching and joining. And thank you for all of the awesome engagement and questions and sharing your personal experiences that made this so much better. So I appreciate all of you, and we will see you inside the group. So thank you. Bye-bye.